2 years ago, I packed my car, old Chevette, 84. Drove it till the engine smoked, hitched a ride through San Antonio. Got a job, tending bar, let a senorita break my heart. I wanna sink my feet into some Illinois clay, walk along the cornfield in the cool of the day, get a dog and chase.
Here we go.
All right, folks, we're live here. Do another Common Ground podcast. Welcome, everyone. We're pretty excited about today's podcast. We've got the Zack Krulac, Vice President, Commercial Ag Loan Officer at Mid-America Bank, headquartered. Where's it headquartered out of?
Canton.
And where are the branches?
We have locations in Lewistown, Cuba, Macomb, and Henry.
Okay, so you're kind of all over West Central Illinois.
Yep.
What is the primary focus of Mid-America Bank? What do you do?
We like to think that we can do a little bit of everything, but I think in our area, it's safe to say that we do have a lot of ag customers. So I'm in the lending division. So, of course, my focus is the commercial and ag loans as well as the rec land stuff. But, of course, we have a wealth management group and, of course, the deposits and everything else. So
Perfect.
And I can speak firsthand to Mid-America Bank. Zack himself, they've done a flawless job for land buying clients that I've ran across in the past. Probably the easiest to deal with, most competitive folks arguably in the business. There's a lot of options out there, but they do a really, really good job.
Well, there's probably a differentiating factor between your traditional bank and some institutions like the Mid-Americas of the world that deal with agricultural, recreational, like they get it. Where if you go to like a Bank of America or, the larger corporates, they really don't understand the ag or the local game and like what markets are doing. And I mean, is that a fair assessment, Zack?
Yeah, absolutely. Thank you for saying that. But yeah, we're a community bank and that's always an emphasis. We know the customers that we serve and you can reach out to us and you're going to talk to a person that you know. And
you're not going to get a switchboard.
Exactly.
And when you say community bank, is Mid-America like a community owned? Is it a credit union or is it a true bank?
It's a bank. We're definitely not a credit union.
Okay.
So we have shareholders. And I think a lot of the emphasis was when we say we're a community bank is we like to be involved in the community, support anything that we can within the community, and just continue to stay heavily involved in the communities that we serve.
And to that, I mean, Mid-America was gracious enough when we held our summit in Canton, Illinois. They said, "Hey, you guys are holding your annual investor summit. Let's do it here at the bank." And they opened up their boardroom. They had coffee. I mean, you guys rolled out the red carpet and
10 points, man.
Yeah.
And you can't find that everywhere.
No, that's not going to happen. So we are truly, truly, really excited for this episode because from my understanding, I'm not a banker. I'm not a lender. Brad's a broker. You're in the banking industry. Things are starting to tighten up.
Yes. Yep.
And we want to talk about the ag side, the brokerage side, the farm and rec side of things, and what these high interest rates environments are going to look like, how that operates, across the board from, buyers wanting to buy ground and farmers looking for operating lines or leveraging property. Like, what are you seeing from you sitting in your office? What are people saying?
It's definitely a unique environment. The inverted yield curve where short-term rates are currently higher than the longer-term rates creates a different type of environment than what I'm used to. I've been in banking about 11 years, and for the most part, the rates have been historically low. And so seeing the feds raise the prime rate as much and as fast as they have has created some unique challenges. We're in a good position, thankfully, as a bank that everything is still good, but From, like you said, from the buyer standpoint, seller standpoint, it does change a lot of things, especially with your operating lines and things that revolve around those short-term rates.
Okay. So do you want to segment this out and talk about the rec and recreational buyer, and then go into the ag side? How do you want to?
Yeah, I mean, that's fine with me. A lot of what I'm covering is on the recreational side.
And what are you seeing on the recreational side? Because primarily you move a lot of ground, and it's primarily mixed use. Your buyers are, hunters, outdoor enthusiasts, wanting to come to God's country, Fulton, Peoria, Tazewell, Knox.
Sure.
They want a piece of paradise. They want to be able to enjoy it, but they also want a little bit of return on their investment. So what are you seeing in the market?
So here, like I would say in the last 6 months, particular, it seems that the number of cash buyers is still fairly high. And I think part of that, maybe the interest rates are driving some of that. But a lot of the transactions here recently have been 1031 exchanges to where, you can defer your taxes, any sort of long-term or short-term capital gains through doing a like exchange, which would be property to property. It could be a mixed tillable timber tract that you decide, hey, I'm looking for just a straight tillable farm. Or, hey, I'm going to take advantage of these high values still, sell 60 acres of flat black tillable, and I can change that into 120 of recreational that might have 30, 40 tillable on it. So it kind of goes both ways. That I think it's definitely limited some of the buying power for people. And Zach and me talk about this fairly often, that the buyer pool is still there, but I think it's more challenging for a lot of folks to buy right now in this specific environment if they don't have these exchanges to do and more cash sort of purchasing buying power.
Well, and I mean, that's what a high interest rate environment is set out to do.
Yeah, I think
they want to tighten the market.
Like Brad said,
spending.
You see the cash buyers, the 1031 exchanges, because the other side is the people that have property currently, but maybe they have a mortgage on it. Well, in the last 5 years, they've been able to lock rates that are half or maybe even less than what they are currently. So they're having to make a decision. If I sell this, I'm going to have to buy the next property at our interest rate that's much higher. So that limits the selling pool. And as he said, so we have a buyer's pool that there's still people out there that want to buy, but a lot of sellers are having to face those decisions.
And I think that brings on a good question. And you and me have talked about it before in the past briefly, but what happens when you had these folks like 3-4 years ago, they got into these 5-year sort of adjustable notes, sure. And, we got in, or somebody say they got in 3 years ago, they got in at 4%, just for a round number. Maybe it was 2 years ago when numbers were like that or under. But what happens when that 5 years is up? I mean, that mortgage changes drastically. Your payments are substantially different at that point.
Yeah, it can for sure. I mean, and I don't want to speak for all banks or anything, but specific to my situation, when we do those 3-5 year rates, they are tied to the U.S. Treasury. So
sure.
Right now, the prime rate is significantly higher. The Treasuries are lagging behind a little bit. They have increased certainly, but when that adjustment period comes that you're talking about 5 years into it, it's typically tied to that 5-year U.S. Treasury plus a margin. And so it will adjust, and it will adjust up right now. Sure. There are situations where you can have caps in place and to protect those adjustments from being extreme.
Sure.
But it's not necessarily every time.
And I want to bring up a dumb question because this is completely off the cuff, because inflation has been fairly rampant for the last couple of years. So if I'm a landowner, and let's just say I bought a piece of ground and I paid $500,000 for it, and I took out a little bit of a note at 4%.
Sure.
All of a sudden, that loan is coming up, and my choice is to pay it off or do a refi.
Mm-hmm.
So my options are fairly limited, but are you seeing inflation taking hold and taking that $500,000 piece of ground up to $600,000 and being able to do like a cash out refi and keep the balance a little bit in check because they've got some equity to help balance the payment with the higher interest rate?
They certainly have those options, and of course we will try to discuss all of those options, and ultimately that leads to it's their decision. You don't necessarily have to technically refi it; it's just automatically going to adjust. Yes, so the payment adjusts accordingly. When it comes to selling it, then there's a whole different conversation as far as what are the tax implications. So you bought it at $500,000, now it's worth $800,000. There's going to be some significant capital gains, and so then there's a tax burden that comes along with that, which is where you start seeing these 1031s and things like that to try to
alleviate.
Alleviate those.
And I guess kind of on the same topic, would you believe that because we've still for the last 24 months or so in the maybe we're starting to see a little bit more straight tillable ground, but the recreational market has been very limited inventory for say 24 months now going on.
But I think that goes to what he's saying is you've got people that bought recreational ground that, they bought it at 500. It's worth 7 right now.
Yep.
They would love to be able to sell that or roll it into something else. But then they're staring down the face of a 7 or 8% mortgage on that farm
and the tax
implications.
Yep.
So
20 something. You're at 100
and it's just shrinking the inventory down.
Exactly.
Which elevates prices.
Yep.
But there's no flight to safety.
Right.
No, unless you're willing to pay the long-term gains and just take your money off the table and kind of start from scratch and see if this will go full circle. But I guess my question would be, do you believe that once we hit, because there's going to have to be a pocket here where these 5-year, 3-year, those are all going to come to a head at some point. And so do you believe that we're going to run into people who say, hey, listen, I've really enjoyed this farm, but I can simply no longer afford it at 7.5% interest. I have to sell.
It's hard. If we had the magic 8 ball, of course, we'd probably all have a lot more money in our pockets. It's hard to predict that. We're really not that far into this higher rate environment that we haven't seen those 3 and 5 years hit that point.
We haven't got there yet.
So it'll be interesting to see when we get there, what happens. I don't think that you'll see a lot of people just trying to walk away from it, but I think it's a valid point. And there certainly probably will be some that, hey, when this rate adjusts, my payment's going up and the property's no longer paying for itself.
But, okay. Scrap all that. If property values are going up and inflation has taken hold, we're common ground. We rent out ground. We're renting out ground for 40% more than it was.
Well, it makes it a whole lot more attainable when these interest rates go up.
That's what I'm saying. So if you're a landowner, this is my own self-serving, selfish plug here. But if you're a landowner and it's the value of my ground has gone up, the cost of carrying the ground has gone up, taxes have gone up. Iowa taxes went up 30%.
Yeah, on ag, just a blanket.
Boom, blanket, 30%. The costs have gone up, but if you're not keeping up with your cash flow, it's no different than rental property.
But what's interesting though is the properties through the CommonGround platform, they're staying very much in line with that. We see the 30 to 40% increase in rental values.
39.5%.
Okay, so 39.5%, but it's very much in line with the property values going up.
Mm-hmm.
And these taxes continue to go up, and so the only thing in a lot of cases that people haven't been able to kind of remediate this as a whole is, why is my income off of this farm going up? If I sell a 160 acre tract and it's got 50 tillable on it, well, at that point in time, that ground is bringing $200 an acre. Well, we're seeing that same ground now, $300, $350 an acre. And so it simply makes that note a whole lot more achievable to be able to pay off with less value. And I would think from a banker standpoint that they would really appreciate the ability that we've given people to increase that ROI that's simply going to pay for that farm.
If I bought a rent house for $100,000 and I rent it out at $1,000 a month and my note is 4%, I've got my cash flow. But if my interest rate resets and I've got higher carrying costs,
Your rent has to go up in order to make it worth you.
But then I reevaluate the rental market. Interest rates have gone up. These people wanting to buy homes can't afford them, so they have no choice but to rent. That drives the demand for the rental market. Rent goes up.
Yep.
And you look at it from a farmer's standpoint. And hey, I'm a farmer. I'm not really a farmer, but I'm putting myself in a farmer's shoes. So I want to go from 3,000 acres to 4,000 acres. What are my options? Well, I need to rent more ground because the price has gone up. If I'm going to buy more ground, the price has gone up and the interest rate has gone up.
Mm-hmm.
It's much more palatable for me to rent ground.
Sure.
Wouldn't you agree?
I would. And the kicker in all of it is, as a landlord in that situation, your costs of owning that ground are going up, assuming if you have a loan, but really everything's going up.
Yes.
From the farmer's standpoint, their input costs are going up as well. The kicker is the grain markets. They don't necessarily follow inflation like they would. And so that's where that insurance piece comes in. And it's very interesting and can be helpful to hedge the risk of you're locking yourself into a high cash rent because we're in a high cash rent environment. If things change, or like you said, if that bubble bursts, you've got to have that backup.
Correct.
And that's where, from my standpoint, sitting in my office, it's nice to know that there is a baseline there that protects from it just falling out.
And for everybody that's just listening or just tuning in, or we've done some teasers, but there's a new product that CommonGround has created, working with Hudson Crop Insurance on.
Yeah, I hope it was okay to bring that up. Sorry, I was making the plug for you.
No,
we're so excited for it.
I'm telling you what, you are awesome at plugs, with the exception of your head. So don't take your hat off.
Okay, we'll keep it on.
Yeah, because
we don't want to create a glare.
That's where all the plugs belong. But no, so this cash rent insurance, it's a cash lease insurance protection program.
Yep.
And this just launched August 21st. We've got CommonGround Insurance Group now. It's been a wild ride creating this, but the theme, when we got into renting ground and dealing with growers, I've said it since our first podcast: drive value for the farmer, drive value for the landowner. And the common theme we kept hearing was, rents are getting high. And everybody accuses us of driving the rental rates, and we don't. It's an open, transparent marketplace. It's the fellow farmers in the community that are saying, I'm willing to pay this, I'm willing to pay this, I'm willing to pay this. We never really cared about it until it really took off and we got deep in the weeds. And then it was like, okay, we need to start listening to these growers and these farmers, and what can we do about it? And the uncertainty of signing a lease, whether it's $450 an acre, or $375, or, they're doing the math saying, hell, I'm signing this lease at $425 an acre. I'm really not comfortable at $425.
When corn's $550.
But look at the volatility of the market.
Correct.
Right.
Look at the volatility of the market.
Today,
You can sign a lease when corn's at $550, and it might be at $380 by the time you're making your payment.
But that's what this insurance fixes.
Yes, but that's why we created it. So all these growers are like, hey man, I really want that farm. I could bid more, but I don't know what the price of corn or beans is going to be. And it dawned on me, why can there not be a cash lease insurance protection program, which as of August 21st is now approved and up for any grower to buy for the 2024 planting season. And it basically allows you to hedge through an insurance policy, because it's not a derivative. It's not a CME product. You don't have to go to the board. You don't have to pay a broker. You pick your price window, because it's an insurance product. Because in insurance, for any claim to occur, you have to have a peril.
Sure.
But what's great about this is a peril drives the market.
Right.
If you have a drought, that's a peril.
Yes.
That can send prices higher. Everything affects the price of grain. War in Ukraine, Russia, whatever's going on, all these perils are affecting the day-to-day price. So we created an insurance product to say, hey, here's what the landscape looks like. And I know for a fact, Zach backed this up, ag lenders get very nervous when they see their borrowers paying high cash rent. Correct?
Absolutely. Especially, of course, I've been very familiar with what you're doing with CommonGround and talking to Brad and you and seeing some of these cash rent prices that you're obtaining through the website. And I mean, growing up in a farm family, it's lucrative. And so, forever, for as long as I can remember, there's been crop hail insurance. There's multi-peril insurance that allows farmers to insure against perils, like you said, weather. If the crop doesn't, grow the way it should, or you have that, but now you've created a product that you can also insure against the markets. And so there's things that farmers can't control.
No
weather, markets, and now there's opportunity to insure against both.
And nobody had ever thought of it that way. And I'm not an insurance guy, I'm not a farmer, but through the course of doing this, it dawned on me, and I ran it up the flagpole with Brad and said, well, if you can insure against, hail, drought, right, all these perils, that affects the market.
It does. Yes, absolutely. But the market's out of your control, and there's no protection against the bottom falling out, or as a landowner, the skyrocketing.
And we were having a conversation over some purified water in a red Solo cup the other night. And, you said, man, marketing grain.
Mm-hmm.
We can loan money to growers.
Yep.
We can't force them into good grain marketing.
Sure. We can encourage it.
We can
connect them with traders that are way more knowledgeable than myself or the farmer in looking at futures and all of that. That's their job. But it's not something that we can enforce. We would enforce. We ask for crop insurance, to usually typically 80%. And
crop insurance is to hedge.
But
but it doesn't hedge against the price.
Against the markets.
Until now.
Exactly.
And now you as a banker can say, hey, that's fine. You've got this lease, this lease, this lease, this lease, because it's all lease specific.
Yep.
You got this lease, you're paying $4.75 an acre on. That's cool.
Until corn hits $3 and beans hit $9.
It's really cool. Really cool. But as a banker, it's no different than homeowners insurance.
Right.
Exactly. You can say, that's fine. Yeah. I'm looking at your portfolio of rentals.
Yeah.
You want to pay $4.75 in rent?
No problem.
And you want an operating line? You're going to need to buy this cash lease insurance product. We call it a CLIP. Apparently everything in the insurance world is an acronym now. So it's cash lease insurance protection, but it's a CLIP. But you can say, I'm going to protect the loan here.
Sure.
To say, no different than a bank lending me money to buy my house.
Mm-hmm.
They need proof of insurance to know that if that house burns down, if there's a peril and shit hits the fan,
there's protection.
There is protection. Mm-hmm. So that's what I think is game changing about this.
And I want to guide folks here, like even what we've got up on the screen here from the homepage. From if you go to commonground.io, we've got this brand new insurance tab on here that you can read all about this. It gets far enough into the weeds that I think most folks will understand the concept of it. All of the farmers in our network that we've had direct discussions with.
Scroll back down. all the way. It sum it up right there. Lock in your lease revenue.
Correct. Yeah. And so it's buying puts that don't expire, right?
And you don't have bushels. You you don't have to pay a broker. You basically pick your price window and say, okay, I'm paying $475. What I love about the product, and this is by design, but right now, what's corn at? $475 or, roughly ish on December futures. So I got a lease for 2024 that I'm like, oh man, corn's at $475. I'm paying just right at the max of what I want to pay. Well, let's say yields come in lower than expected. The corn bumps up to $550 or $575 over the next couple months. You can say, oh, that ground I'm renting, I want to pick up $100 an acre.
Of my rent payment.
Yep. And lock it in at that. And then corn goes up to $6. And then you can say, I'm going to buy another $100.
You've got $450 in liability hanging out there, and you can buy this.
You can layer it in with the markets with a one-page application and a lease agreement.
Cost averaging.
It's extremely dynamic. It really is. I mean, I think it's super.
But I would encourage people to come to CommonGround.io and just go through this insurance section. There's a lot of stuff in here. We've got a couple really, really great agents working
Trevor
for us
and
here. Yeah, Trevor Froling, Art Froling. It's got their contact information. And these guys, like Chris and me, can speak to this, to the insurance side of the business. Chris more than me, but Art and Trevor are really, really dialed in. I mean, they are just spectacular. Great, great feedback from every operator.
They're the best of the best. They're local here in Illinois, but they operate all over the Midwest.
Yep. Licensed
in a lot of different states here in the corn and soybean belt, but they're also growers.
Correct. They're farmers
they're
themselves.
Farmers.
Yes.
So they treat every client as if they were farming that ground, and they say, here's what you need. Here's the protection you need. But I honestly think between the federal side of things, from your direct peril from the wind or the hail or, derechos, awesome. But there's never been an insurance product in row crop farming that has price protection like this does.
Right.
Ever.
And there's flex lease policies and stuff out there, but they operate very different.
Flex leases, I mean, it's a great product, but I mean, it's 5 to 7% of the market is on a flex lease.
Sure.
So the majority of your leases, and maybe you can shed some light, the majority of the leases are on a straight cash rental, right?
Yes.
Yeah,
absolutely.
So this covers the rest, the lion's share of the market from an insurance standpoint. And you're not the only banker I talk to in the ag world.
Sure.
But they're like, well, this is a game changer.
Yeah, absolutely.
And I would encourage the bankers, if any are listening to this, go look into this as well. Have a conversation with Art, Trevor themselves, and just educate themselves so they can speak to it a little bit to their clients who are paying these higher rents that it takes to get this ground now.
What was funny is when we were in Decatur at the Farm Progress Show, we had a couple of lovely women from the USDA stop down at the booth, and they're like, what is this cash lease insurance protection? And we explained it to them. And here's what's great about this. It gives every grower an equal opportunity.
Yep.
Because if you're a 900-acre grower and you're buying your inputs at scale compared to the 9,000-acre grower, mm-hmm. How can you afford to pay a higher cash rent not knowing what grain prices are going to do?
You can't. You don't have enough to
extremely
fall
risky.
Back onto.
It's very risky
to offset. Yeah.
But for the up and coming generation of farmers that might have,
which most of them are in that 900-acre or less range, where it's more expensive for them. It's the easiest way to put it.
Correct. It's more expensive. They've got higher borrowing costs. That they're higher leveraged clients.
They have less acres to spread those losses over. They have more chances to have this farm still be extremely profitable, This one maybe lose, but it's okay because I've made more over here.
And they might not
more
be
eggs in one basket.
And they might not be the best at marketing grain.
Correct.
Because they're younger, they're newer, they're learning the ropes. But this levels the playing field for the 35-year-old grower that's got 900 acres, and he gets a shot on CommonGround, and going rate is $400 an acre, and he's sitting there going, how do I swing that?
Yep.
Well, do the 400, buy the insurance, and secure your price.
And prior to this, I think it's safe to say that the majority of farmers, and like I said, I grew up in a farm family, like the calls and puts are a great thing. They are, but it does take a certain level of knowledge to be able to play that game, where this simplifies it tremendously.
We've got a group of operators that they just love it. I mean, that's what they do. I think they mess with this stuff daily. It seems like.
Right.
Those are typically a lot of your better farmers. They can do that.
I asked one the other day. He's a 10,000 acre grower. I asked him, I said, what do you think of the clip product? He's like, honestly, man, I think it's incredible. It simplifies everything. He's like, what you have to understand about farming today, the name of the game is marketing.
Absolutely.
Mm-hmm. That's it. Like the planting equipment and the harvesting equipment, like it kind of does its own thing. There's definitely ag tech revolution.
The newer, there's certainly benefits to being able to have all that newer technology and capitalize on that. But I would completely agree with you from my standpoint as a banker that your better farmers are the ones that can market.
Well, he explained it to me this way. He said, Chris, if I bring in 1 million bushels of corn and I miss it by 20 cents.
It's a lot of money.
A lot of money.
Yeah.
20 cents.
Sure.
Correct.
And we can see that volatility on a daily, weekly, monthly basis nonstop.
Pretty quick. Especially if you're having to take it directly to market.
Yep.
Yeah. If you don't have storage.
Real tough.
And then you're paying for storage and waiting.
Yeah.
You're paying for drying costs and storage. It gets real sticky real quick if you don't know how to market your grain.
Sure.
And I would venture to guess, you can probably speak to this. How many guys do you think are already selling their grain for next year?
It would be a minority. It would, and one of the first questions I would ask my clients, and if they don't know, then we work through it. But what's your break even? And there are more farmers than you would believe that probably couldn't tell you what their break-even cost is as far as what it costs them to grow a crop per acre. And once you know that number, you can take advantage of this because that's all part of the marketing. That I know that I need this much when the markets are high enough, I can lock it in here. Well, when you're locking into a cash rent, I need to insure it at this price. And that ensures where I'm at. Yep.
Yeah. And you can set the price. And your top line coverage, if you sign a lease at $400 an acre and corn's at $5, you set when they start paying your rent. You can set it at, if corn hits $475, that insurance starts paying its indemnity.
Mm-hmm. Sure.
If your bottom line trigger is $430, your break even.
Yep.
Your rent's getting paid.
Yep. You need to know your break even. If I'm paying $400 cash rent, with my input cost, I'm going to be at a total of $775 an acre. So then you know that it's costing you $775 an acre to grow that crop. So how much do you need? And
what does the commodity have to be?
Yes.
When you go to sell,
exactly. You just kind of back into it.
Yes.
And you buy this policy based off of those figures.
Exactly.
And we kind of went off on a huge tangent here with, we're excited about it, obviously, because
my fault.
It's a revolution. It's a revolutionary.
First podcast.
You can tell I'm passionate about it.
We might have you back,
But our next podcast with Trevor, who's actually out in the field selling this, he's going to be able to shed a whole new light on it, go through the quoter, go through the calculators, and really show everybody how flexible this policy is and really what it can do for your operation. because it's going to separate the wheat from the chaff.
Well, and I think too, on outside of the banks alone, it's a really great product for farm managers to be able to utilize with their clients. Mm-hmm. That maybe they've got a group of in their network that they just haven't been able to be comfortable paying these higher rates for their landowners. And I believe that farm managers pushing this to their farmer base is going to help out immensely to be able to drive prices up.
But it protects everyone.
Well, I was going to say the question I would ask, and again, I know we're off on a tangent, but reverse the situation to an environment where we're in low cash rent. The product is available to the landowner to ensure themselves against everything going up, and them shortchanging themselves on a 3 or 5 year contract. Yeah.
When you sign up for a 3 year contract,
so it goes both ways.
Corn was $3.50 on year 3; it's $6 now. Well,
it's available for the landowner.
Should be able to benefit from that as well.
Yeah,
and it
is.
And that's
a question. It is.
We're working on getting that installed into the product as an upside protection for the landowner. But if I'm a landowner, and I've said it 1,000 times, I own a lot of rental property.
You need to know that they can pay it.
If I could buy a product for my rentals and my duplexes to say, I'm going to pay X amount in premium a year, but I'm guaranteed this.
Yeah.
Done.
Yeah. Absolutely.
Done.
Yeah. Yep.
And to Brad's point, when we get into these higher rental rate environments, if you're a farm manager and you're not pushing this for the farmer and for the landowner,
well, it's protecting both sides. You almost have to. I mean, that's your job.
Fiduciary responsibility.
Yeah. Sure.
And we got into it a little bit on the last podcast, but there's certain perceptions.
And I'm not anti-farm managers. I just think that they could operate differently in some cases. When I've seen rents that they are getting for the landowners who ultimately are paying them, that are well undervalued.
But the problem, the issue you get into with farm management, this is what I see. They're charging the landowner a fee, saying, hey, I'm managing your farm. They go get a rental rate on their farm ground. Okay, I got you $375. We're sitting back there with what we do, and we're like, bullshit. That farm should run out for $425, $435, $445 all day long.
Yep.
What's the farm management company worried about? That farmer paying that high rental rate and not being able to pay his bill.
Correct. Sure. That makes
sense.
sense.
It's not like they're doing it maliciously.
No, they're playing it safe, and I understand
They're
that.
saying, hey, we have to protect the grower and the landowner to make sure bills are paid and the farmer's profitable.
Sure. Since they're the farmer that we chose for this, the last thing I want is, as a farm manager, to
exactly. They don't want.
Sorry, landowner. The guy that I chose, I put on
can't pay the bill.
He can't pay this year.
Correct.
Maybe we'll try again next year.
They got egg on their face.
It's not how it works. But this will give them the ability to leverage on some of this and drive higher. Drive their guys a little bit higher maybe than what they were previously comfortable at. The landowner benefits, everybody benefits.
We'll see what happens.
And the farm manager they get a higher clip then as well. I mean, they're cut off of 400 is higher than if they were getting a clip off of 300, right?
Yeah.
And 25% higher.
Correct.
On their take of the 6% that they take from the landowner.
There is no reason why every farm manager in the country would not want the farmer to carry.
And I would love to talk to them and for them to understand this a little bit more. I get that. I mean,
exactly.
There's not a whole lot. There's not a whole lot of people that do.
There's like 3 people that like you.
His wife, his kid, and who?
Yeah, 2.
His wife likes him.
Yeah, okay, sometimes
maybe kid and 2 parents.
Yeah. Brad's wife likes him on Monday, Wednesday, Friday.
Sometimes,
my wife likes me on Tuesday, Thursday, Sunday.
So it works. I guess
that makes sense.
It's a balance.
But I would love to talk to farm manager, and just bring this, like, kind of them into this light to where they can help both sides of their operation.
They're going to make more money.
Product. Yeah.
The landowner's going to make more money, and the farmer's got downside protection.
Mm-hmm.
I'm confused as to why this isn't going to be.
Well, it's just starting, you know. I mean, I think there's still some obstacles to get over, but if your insurance company on federal crop or any of this stuff is Hudson, we're the only ones who have this.
Well, that's an important point, because we created this with the cooperation of Hudson.
Yeah,
and
such great company.
Great group of guys, very, very outside the box. And this is a private product.
Yep.
Country companies, Wind Hail, Great America, like nobody else has this product. Mm-hmm. It is a private product through Hudson to protect the farmer. Like that, and
sure,
they said when I went to them with the idea, they're like, "What's the upside? How does this benefit the grower? How does this benefit the landowner?" And when we walked through it, they're like, "Oh, why has this not been done before?"
Yeah. It's surprising to me that you were the one that thought of it, to be honest.
Well, everybody listening doesn't really know this, but like kind of a big deal in the insurance world, you know. But to your point, if you've been in the crop insurance world your entire life, it's what you know.
Right.
Here's the products, sell this. Yeah. Here's the federal side. Like, sometimes it takes
somebody from the outside
looking in,
who doesn't do it.
And you know me. Anything I run into, I'm questioning.
Sure.
I mean, you and I go do a drive-through on a road show, and we're like, why the hell are they doing this? Like, why wouldn't they do it differently? Like, we're always
buying Arby's. You know?
Yeah, I don't know. Like, what? Why are they doing it this way? Like, why wouldn't you do it this way? And then we'll go down a rabbit hole and be like, oh, well, yeah, they're a lot better at selling roast beef sandwiches than us. This one, it took. Like, it caught traction. So, like, I mean, it's not like I'm a savant, but it just took somebody with an outside perspective, because I'm a landowner. We're sitting here on my farm.
Yep.
And I just get call over call saying, I'd pay more, but I don't know what the price of grain's going to be. I'd pay more, but I don't know what the price of grain's going to be. God, I want that farm. I'd gladly pay $4.50, but I can't, because I don't know what the market's going to be. Mm-hmm. And I just said, well, why can't we create a product to fix it?
Yep.
Buy your policy. So, but back to what you do for a living on the lending side of things.
Sure.
Where do you see rates going?
That's a tough question to answer.
You were in Jackson Hole with Jerome Powell, right?
Yeah, I was there.
You took your jet?
Right. Yep.
Yeah. Okay.
He and I talk often. It's hard to say. I think that we are starting to see the inflation come down, so I think that they're probably gonna start slowing down the rate hikes. I wouldn't be surprised to see another one or two. But I think ultimately they're just going to keep their eye on the economy and the inflation and see where it goes. But that's an impossible question. I feel like
it is an impossible question. But and I'm getting deep in the weeds because I'm a finance guy.
Yeah, that's fine.
So when you see what's going on with the dollar, when you see what's going on with the yield curve, when you see what's going on with the debt, how, as a banker, how do you fight inflation from the Fed level and balance printing more money? Because here's the death spiral that they're getting into. Every time they raise the interest rate, it costs us more to service our debt as a country.
Sure.
Which means we have to print more money. to service the debt, which
devalues the dollar
and increases an inflation environment.
Mm-hmm.
How does that nexus of where we're at come to fruition? And they say, okay, we can start lowering interest rates again, but that's going to drive more inflation.
Right. And that's the conundrum that we're in. And I'm certainly not an economist by any means, but it's interesting because we've seen the last couple of years with the pandemic and things where there was a lot of money coming out of the government, and the farmers have had real bumper crops for the most part in our area, I should say. But so the farmers have been able to put a lot of money in their pockets as well. And so they're able to withstand these higher rates right now. It's just a matter of how long are these rates going to stay high, and how long is that extra cash that we've seen the last couple of years lasting. And I think at some point it's going to run out, and then that's why it's not up to us, but we'll see what happens.
Yeah, it's a way bigger problem than three of us are going to solve at the Pear Tree Studios.
It's good to discuss though, and try to at least educate folks on some of the stuff that maybe don't have a banker buddy or something along those lines.
Well, he's not my buddy at all. Yeah, and he's terrible at Tetris.
All right. Well, you got me in Tetris.
He was complaining that you took the dartboard.
I was going to say, you have a dartboard in your place. And
for those of you listening that don't know Zach, he's very competitive, and he's really, really good at a lot of useless skills.
Any bar sport,
pride myself
or
on
bowling.
Those.
He is if there are Olympics for some of these things,
but I'm the same way.
The red, white, blue.
There are
jacket.
Olympics. It's called the Beer Olympics.
Yeah, Crew needs to get in because he's real good.
I finally found Zach's weak spot. It was Tetris, and I literally made a shell of him one night playing.
I have
Tetris.
to admit, you just took me to school in Tetris, but
I
was also very happy to take you to school on your own dartboard here.
Well, and I'll be honest, like when we created the Pear Tree Studios and the dartboard came down, it really didn't bother me that bad.
Well, after I was here, it didn't.
It came down pretty shortly after the whipping that grew.
I believe you were claiming that you were undefeated.
The good news is we still have a Brunswick here in the studio, so we will be playing billiards, and there is a Papa-Shot out there. Although I'm a little nervous after watching you warm up on the Papa-Shot.
We'll see how it goes.
I looked in your pink Jeep out there and saw a pair of Jordans, so. I'm a little bit nervous that you might suit up on the Papa-Shot.
Oh, he's in trouble.
Yeah, I brought the gym shorts and everything if we get to the Papa-Shot.
So, but no, overall, we are super excited to be connected with you, have you on the show.
I appreciate it.
Thank you.
Just covering all the bases. It's going to be interesting moving forward with the whole dynamic of land ownership and how this unravels, and interest rates and carrying costs of land and taxes and rental rates. But that's our job. We keep on keeping on.
I think it boils down to the industry that the company's in and that we're in. It's very volatile. There's the markets, the weather, everything that plays into it. And so that's why some of these products that we're talking about and CommonGround, it's an answer to alleviate some of those.
Absolutely. And to that point, Brad, I think you want to showcase some properties up for lease that are pretty cool.
Nice farms. We've got a bunch of nice farms on the platform right now, but a couple that I specifically wanted to look at. Really nice 136 acre tillable tract. Out of that, it's a 149 acre tract total, 136 tillable acres. It's in Wells County, Indiana. This farm got a NCCPI of 65, 12 days left in bidding. Current bid is $230 an acre. We got a couple active bidders in there, but definitely one to take a look at if you're over in that Wells County, Indiana area. Just a nice piece to pick up.
Hey, can I stop you right there?
Yeah.
For some of the, what's NCCPI?
So NCCPI is the soil rating for the majority of the states, actually. Outside of Illinois, which is we've got productivity index, which is PI in Illinois. We've got corn suitability rating in the state of Iowa, which is it's actually a CSR2 rating that is 0 to 100 scale, much more similar to the NCCPI scale. Which is different than the PI scale, up into the 140s as the best soil out there. But
just to really confuse you, you've got PI,
right, which is what I'm familiar with. Yes,
NCCPI, in Indiana, CSR2,
okay,
and then I think in Minnesota it's CPI, Crop Productivity Index.
Yep.
So where would 65 land on the scale? For the NCCPI,
that would be would be 100
on the Illinois side.
Is that a class A, a class AB, class
high
B, high B?
65. I would have to look at the scale honestly, but it's like 0 to 100 more or less. So
gotcha.
It would be
however it correlates.
Yeah.
Okay.
Yep.
I think you'd be looking at like a 118, 119.
Gotcha. Somewhere in that range.
It's less than a 2
PI.
multiple on the correlation to Illinois PI, but I mean, at some point you would think the USDA
would try to come up with one.
Would, I don't know, get their shit together.
But I think it's state by the state kind of chooses how they want to operate, from my understanding.
But it's all governmental.
No, I understand that, but maybe just make it the same across the board, so people in Illinois understands what soil types in Iowa or Indiana or.
You would think so, because a lot of people buy ground out of state for investment now, absolutely. And it's like, oh, well, you CSR2 over here and this and that.
That's when picking a good qualified local broker in that area can be very helpful.
Makes sense.
As well as, a local banker, something along those lines.
Yeah.
Sorry to interrupt.
No, it's a great question. It really is. So the really nice farm here in Wells County. So if we go here, let's look at a farm here available in Delaware County, Iowa. Current bid on that tract is $400 an acre.
Spent a year there one night.
That is this is a nice farm. Five active bidders. Starting bid was $300. Previously, this landowner was getting $330. Current bid is $400. There's 19 days remaining.
So the old cash rental agreement was $330, and now it's up to $400.
Correct. Yep.
So that's 70 on $330.
Quick math.
I wish we had a banker here.
Yeah.
What do you want?
Crew can do it in his head.
I'm sorry, I was distracted. Chris, do you know who the skinny young guy is here?
Yeah,
that was Brad 10 years ago.
Oh, okay.
I probably need to change my photograph. Right?
You would sell way less.
Very deceiving.
You would sell way less ground.
Oh, I agree. Yeah, that's why. I mean, look, we've got kind of a scrappy lad here that
just put an asterisk on that picture 40 pounds ago.
Yeah, that's why. I'm back on my yo-yo keto.
Yo-yo, I call his diet yo-yo keto.
There you go.
I just started it again yesterday.
Makes sense.
I'll try to slim back down. Maybe probably 3 or 4 podcasts from now, I'll be looking similar to
Brad is like a hot air balloon. He inflates and deflates with each diet.
Up and down quite a bit. But
yeah.
Fair enough.
Catch me on the right day.
Sorry,
then maybe I'll be a little more like that. But this, nice farm, Delaware County, Iowa. It's got a CSR2, which is Iowa's scale of 80.3. So nice, high yielding farm, good tract. Just outside of here, let's zoom out here a little bit. And we are close to Masonville, and just southwest of Manchester.
Nice.
So nice farm. Definitely worth taking a look at. And the third one is a really unique tract here in Schuyler County, Illinois. It's got a total of 218 tillable acres.
That's about 40 minutes from here.
Yeah.
30. Yeah,
half hour.
We looked at this the other day. It's a great farm. Very, very cool.
Really neat farm. Yeah, Chris and me got to spend a bunch of time on it. It's protected by a 30-foot levee. And, so it drains well. There's a pump house, 135 PI ground. Very strong soils. Sure. We've got 23 acres out of it, 10.5 or a little just shy of 11 acres. Or percent of that entire field is 143 PI. So It's a nice, really nice farm. We pulled some corn. It looked like they were going to be in the 230, 240 bushel corn.
Show that pump house. I was most impressed with the pump house.
Yeah, the pump house is really neat. And completely refurbished in 2013.
That can move some water, by the way.
Yeah.
With that 30-foot levee.
But just a really cool farm, good yielding tract. So Schuyler County, this farm here has 35 days of bidding left. One bidder in there right now. We just put it up like a week and a half ago. So starting to get some traction, but definitely worth looking at. If you're in West Central Illinois, this would be a nice farm to definitely to look at. Got really nice roads through it, great access.
That's a county road going through the center of the field.
That they maintain.
And I have no idea. Like, if you went and visited that farm, you'd be like, how is this a county road through the center of
that? Just makes it easier to farm.
Absolutely. Yeah. Good ingress and egress. And we actually just had 6 or 7 farms close out yesterday.
Yeah. Some really
in Adams County, Illinois. Those were impressive. I mean, we were shocked at the results. I mean, some of that, I think some of the tillable were like 111, 112 PI. Go up for lease and property type tillable.
Let's see.
Go up there and look at that.
And this is unscripted, and maybe I'm putting you on the spot, but I mean, have you guys really seen anything on the site that has gotten less?
No.
I mean, it's
we've never had.
Check this out.
Go down. This is a pasture.
This is a pasture lease. It went for
really
110.
An
acre.
273 acre pasture lease for $110 an acre. And I think they were up from before $40-$50 an acre, so they over doubled. Again, just a nice.
Go back to that 60 some acres, because I think. Go down. Yeah, that Mendon, Illinois piece, that was great. I think he doubled that. He went from 180 to 360.
Yeah,
I recall.
It's a nice farm as well.
But 111 PI, 360 an acre. I mean, that's going to produce on a good year 200, 210 bushel corn.
Yeah,
that makes sense.
Like, that's a prime candidate for the clip product.
That'd be a great one to make sure that you've got your butt covered on.
Yeah.
Buy
the insurance for $100, 120.
Yeah.
So your nut on the farm on the rent is $240, and if corn goes down, the insurance pays the rent.
And you're comfortable.
Yeah.
Yep. 3-year lease, I believe. Let's see, the 3-year lease on the Schuyler County farm, 2-year lease on the Delaware County, Iowa farm, and a 3-year lease on the Wells County, Indiana farm.
Yeah.
And these are just a handful. There's a whole bunch more properties out there available. There's a bunch of still a mix of hunting tracts that are out there.
We got new hunting lease coming up out of Indiana tomorrow.
Yep.
Andrew Epperson, and I think we got 7 new farms, like prime farms coming up in Illinois in the next couple of weeks.
For tillable farms.
Straight tillable, high PI.
Nice tracks.
Just straight tillable, flat blacks. Group.
And I know
group out of South America that owns some ground up here. Love what we're doing. So we're going to have that. And then I think we got close to 700 acres in Iowa coming up that's prime farm ground. So stay tuned, everybody, for that. And I think our second camera just died. So that once the second camera dies, I think we've reached our potential.
We hope we're not talking to nothing, right?
I do that all the time.
I know, but it's just like, man, that was pretty good. I had a good time with Zach and everything, but we only got the first 15 minutes of it.
Which is
it's hard to rescript this.
And I'm not doing it again.
We've done this. You don't want to do this again?
I'm kidding.
Well, you're going to be
anytime.
No, I mean,
I appreciate
I think the only feedback we're going to get is you've got a face for radio. I honestly questioned why you guys decided to do the video, because I couldn't. Well, and I told I told you this before we started, and I told my wife.
I mean, there's a reason you put me in the middle, facing the cameras.
Correct. You're the guy. And, like, just to let everybody know, Zach is single.
Here we go.
I told you I was going to bring it up. Like, he is the most eligible bachelor in Fulton County. So Feel free to reach out. Even if you're not interested in leasing ground, I think you can probably lease out Zach for a night or two.
I don't know about that, Chris.
Yeah, and we're not buying insurance on that either.
Yeah.
So,
No, he's got, Chandler, he's got,
I was going to say,
well, but you're.
I mean, I guess by
you-
definition.
By definition.
I don't know what the definition is.
Well, you're not
But I
married.
do have. I'm not married.
But you have a
That's
girlfriend.
true. I do have a girlfriend.
Yes.
Yes,
A very wonderful
absolutely.
girlfriend that you will not introduce me to.
Well, I mean, that's because I know you.
Correct. So we have obviously probably had the most fun we've ever had doing a podcast with Zach. Just glad he trimmed his beard and wore a hat. But I want to thank everybody for tuning in, and hopefully you glimmered a little bit, maybe got a nugget of knowledge out of this. But feel free to go to the website, check out the ground we have for lease, check out the Clip product on the insurance side of things. You can Google Zack Krulac and his history.
I don't know.
It's quite impressive. He's not good at Tetris, but
beyond the Tetris, thank you for having me.
we greatly appreciate it.
I really did enjoy it.
I think you're going to be a regular on the show.
Well,
I really do.
We can
and
probably arrange that.
I think we'll talk to the producer and kind of go
Get
through
his
the clip
thoughts.
notes.
inflation updates with Zack Krulac.
Yeah.
But
Yeah, we're still stuck in a rut, boys. Yeah.
stuck in the rut here. But no, thank you to everyone for tuning in, and we've had a lot of fun here this evening. And we're going to sign off from the Pear Tree Studios in true fashion, and thank all of none of our sponsors: LG TV, Pollywood, Red Solo Cup, and still haven't got the call from Copenhagen.
Not yet, but
That's a shame.
I don't.
I can't believe they haven't called.
Dude, if they had any idea how much I go through, they would at least start sending like samples or
They
something.
know.
They know. Yeah. They have to know.
They know.
Yeah.
They know. But thank you everyone. Appreciate it. And feel free, jump in, join the CommonGround community on Facebook, and appreciate you tuning in.
Thanks, guys.
Thank you.
Take care.